I'm Emily Chang, and this is Bloomberg Technology. Coming up, Samsung's heir apparent goes from crown prince to cautionary tale after a judge hands down one of the harshest sentences for a top executive in South Korea. What's next for Samsung and who succeeds J.Y. Lee? Our roundtable discusses. Plus, the race to the top of the e-commerce space is going down to the wire, with Alibaba just a few $1 billion away from snatching the crown from Amazon. We'll break down the second quarter rally that closed the gap. And Musk, Bezos, and Branson are not the only billionaires betting on outer space. We'll take a look at how others are investing in the final frontier. But first, to our lead. He's long been considered the crown prince of the Samsung business empire. But now, the company's heir apparent, J.Y. Lee, faces 5 years in prison. A South Korean court imposed the sentence after finding Lee guilty of bribery. Prosecutors say Lee spent $6.4 million bribing the government. The conviction raises doubts about whether he'll return to Samsung, the company his grandfather founded. So, big question remains. Who takes the family mantle from here? And will this set an example for other chaebol cases to come? Joining us now, our guest host for the hour, Bob O'Donnell, Technalysis Research President. Also with me here in the studio, Bloomberg Tech's Ian King, who just came back from a big reporting trip in South Korea. So, Ian, you went into the courtroom. J.Y. Lee was there.
Yeah.
How surprising is this verdict?
I think anybody who spent time in the court like I did, including a lot of my colleagues, were pretty surprised by this result, because the prosecution were doing an absolutely awful job. You know, there's no other way to describe it. It was terrible.
How so?
There was no smoking gun. A lot of the witnesses that they brought up were destroyed by Lee Jae-yong's lawyers, and it really didn't look like the case was being proven at all. And that's the way it went almost up until the end, and then we saw the result.
So this verdict then is even more of a statement from the South Korean government,
I mean,
right?
That is the explanation that's being given by the pundits, that the South Korean government, the South Korean people had had enough of this kind of cozy relationship, this arguably illegal relationship between big business in Korea and politicians, and this was a statement that they sent saying enough's enough.
Bob, what does this say about the ongoing future power of the chaebols, the South Korean conglomerates that have historically wielded an incredible amount of power, and many executives that have come before J.Y. Lee got off scot-free.
Exactly.
And were charged for the same thing.
Well, the chaebol plays such a critical part of the South Korean economy that it's not going to change overnight. I mean, these are institutions that have been built up over decades. So tearing them apart, if that eventually does happen, would also take decades. But nevertheless, clearly, as Ian said, this was a statement by the South Korean government to say, look, there's too much of this going on. The thing that's confusing for a lot of us in the U.S. who kind of watch it from afar is that the chaebol structure is so complicated and so complex that even when you're there and you realize there are companies that are named Samsung something or other, they might as well be competitors. So it's a very confusing kind of a thing, because here you have this differentiation, yet somewhere at the very, very tippy top, there is this group of people controlling it. And that's, of course, where J.Y. Lee was. That's why I don't think we'll see a big impact on the individual businesses, and why any breakups would take a very long time.
Now, Ian, J.Y. Lee has said he will appeal.
Yeah.
Is he actually going to jail? Will the sentence be suspended?
It can't be. 5 years is longer than 3 years, and 3 years is the maximum suspended sentence available under the Korean court system.
So what does this mean for Samsung itself?
Well, I think Samsung Electronics is the biggest focus. That's the biggest company in the group. That's the one that contributes the majority of earnings and profit for the group and for South Korea as a whole. Bear in mind, he's been in jail. They haven't allowed him out on bail. He's had, in theory, nothing to do with the running of Samsung for many months now. Samsung Electronics, record profits, record earnings.
And the stock's on a run as well. I mean, Bob, do you think this will have zero impact?
I really think it will. And again, it's fundamentally the nature of how the company is structured and how isolated those top groups are. A lot of this case was about them being able to maintain, the family being able to maintain control over some of the smaller pieces of it, so that as a whole they could have a large voting right for the whole thing. But as far as the individual businesses, again, I think, as Ian pointed out, there's nothing really that's going to change. We haven't seen any impact on the brand. I mean, if you think about how much Samsung's been through this year between the Note 7 fire and then this, and there's no impact on the brand whatsoever. So this isn't going to do anything.
So Who takes over from here? I know he has a couple of sisters. They haven't been incredibly involved in the electronics part of the business.
Well, as Bob said, I mean, he wasn't running the company, right? He wasn't the CEO. They have professional managers who run the chip division, run the display division, run the mobile phone division. Those guys are still in place. Those guys are making decisions.
You know, we'd been told that he had sort of, you know, an impact on the vision of the company and also an impact on dealing with, well, with regulators and, you know, building the sort of global face.
He definitely had a figurehead role, as his father did before him, but was he designing the Galaxy phone? No.
Yeah. So who takes his place?
The argument is nobody's in fact necessary. He's not losing his stakeholding. His sisters aren't losing their stakeholding. His mother's not losing. Father, they're still there. There's this network that Bob described, it's like a spider's web of cross holdings, is still there. They still, in effect, control and own Samsung as in their general, you know, sort of mindset. But their actual role in day-to-day management hasn't been important, and now that's being taken away. Hard to see what the real difference is.
Bob, Apple's next iPhone is coming out next month as well. You know, Samsung just released another phone this week. The big challenge for Samsung going forward has been to make its software as powerful as its hardware. Is that still the case?
I think it is. But and again, as Ian said, those efforts are happening within Samsung Electronics. All of the sort of the key things that they are doing are still going to continue on. The big question for me longer term is, does this eventually lead to even the breakup of that spider web? That's what when I mentioned earlier that we could see that happen. I think it would take a decade.
That is. I think you're right. That's the risk here.
The risk or the benefit?
You can see it either way. I mean, we've already seen the disruptions, the press, the headlines, all of this fuss that we've seen in South Korea. I mean, this has been front page news for a very long time. That brought down a president. If that filters into the way Samsung does business, if that begins to disrupt and distract the professional managers, then it's a problem. We haven't seen that so far.
All right, Ian King, our Bloomberg Tech chips reporter who went to South Korea, saw it all happening firsthand. Bob O'Donnell of Technalysis, you are sticking with me. Now to a story we are watching. Apple has cut at least a dozen apps made in Iran from its App Store due to sanctions put in place by the U.S. government. Users are still able to access the apps on their phones, but can't download or update. This is the latest example of new challenges Apple faces as it becomes more of a digital services and content provider rather than just a designer of high-end consumer gadgets. The company's services business, which includes its App Store, has increased about 22% in the last year and is its second largest unit behind the iPhone. Coming up, the ongoing battle between Alibaba and Amazon heats up as the Chinese e-commerce giant's market cap nips at Amazon's heels. And Bloomberg Technology is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. Southeast Asia's biggest ride-hailer is planning to invest in Myanmar to tap into the exploding use of smartphones. Grab is expected to spend $100 million over the next 3 years to widen its battle with Uber. It'll also roll out new services like its in-app digital payment system called GrabPay. President Ming Ma says he plans to expand staff in Myanmar fivefold to 200 employees. And according to various reports, Indonesian Uber rival Gojek is raising a total of roughly $1 billion from investors, including JD.com and Tencent. Gojek, which provides motorcycle rides on demand, counts private equity firms KKR and Warburg Pincus as investors. Gojek has become one of the most popular ways to get around in Indonesia, especially in high-traffic cities like Jakarta. Consumers in Indonesia also use its app, downloaded more than 20 million times since its debut in early 2015, to get food and groceries delivered. Well, the U.S. government is ramping up its use of blockchain technology, awarding more contracts, which could in turn fuel broader adoption across the private sector. Joining me now from London with more on how the digital ledger technology is picking up steam, Bloomberg's Caroline Hyde, as well as my guest host for the hour, Bob O'Donnell, president of Technalysis Research, here with me in the studio. So, Caroline, first of all, how significant has the increase been?
Emily, it's increased some 13-fold since 2016. We're talking not vast numbers. $1.3 million is how much the contracts have so far been awarded this year, but still not to be sniffed at, although it's not as much as, say, like the $2 billion has been raised in terms of initial coin offerings. However, we are seeing cash being splashed by the United States government from a federal level, from a state level as well, and we're talking actually fully fledged pilots now. They like the underlying technology, underlying the likes of Bitcoin. It's the blockchain, which basically means you and I could share a database like a Google Doc. We can put real-time transactions in. We can ensure those transactions are correct. And therefore, the applications are pretty much endless. Hundreds have been identified by the US government, federal agencies, for example, and therefore we could see it help in healthcare, we could see it in terms of identifying people, in terms of record keeping. So this is something across the Department of Justice, all those sorts of things that we're starting to see potential applications.
So $1.3 million, Bob, just dipping the toe in the water. Clearly, the technology holds great promise, but it is still very early days. There are big questions about volatility, reliability. What do you make of this?
Well, as Caroline pointed out, these are a lot of proof of concepts, and it's a hot enough and an interesting enough technology that they've got to take it seriously. They've got to try a variety of different ways to think about how can we potentially deploy this technology? How can we overcome some of that volatility? Because, the volatility around cryptocurrencies, of course, has been crazy. And in a lot of other markets and a lot of other places, you can't have that volatility. So they've got to figure out ways to adapt the technology and yet reduce the volatility. And so I think they're going to try it in different places, see what can work, what can't, how do they address the issues of, as these ledgers grow, how do you, manage those? And that's been an issue for crypto coin mining, for example. So those are all issues that have to be looked at.
So Caroline, how does the U.S. approach compare to what's happening in other countries?
I think the race is on, Emily, because here in Europe, here in the UK, for example, we've seen an adoption been hinted at. Back in March, we had the so-called UK digital strategy announced, and they talked about blockchain perhaps helping them with personal identification. We've also had the Bank of England teaming up with Ripple, which is, of course, behind the third biggest cryptocurrency out there. They're looking at how they can employ the blockchain. But in Europe, you've got, get this, Estonia. It is a forward-thinking country. It's also tiny, but still, it's looking at using the likes of blockchain and even issuing its own cryptocurrency to fund a sovereign wealth fund. You've got the Netherlands using it for energy. They're testing it there. And then look at Asia. China has been looking at its central bank potentially issuing a yuan-based token. We've got China looking also at perhaps putting its data online via blockchain. Dubai wants all of its documents in blockchain by 2020. And then you've got, of course, across South Korea, Japan. I mean, the list is endless. So it seems as though the countries are racing to try and get ahead of this technology.
Certainly government validation could go a long way. I mean, if, government organizations from the Department of Defense to Commerce to the Justice Department to the FDA to the U.S. Postal Service are testing this technology, could that also pave the way for increased business adoption across the private sector?
I think it entirely could, Emily, and I think this would be a real validation because at the moment, as Bob was just outlining, the problem has been the link between blockchain, Bitcoin, volatility. It's been the link also between, worries about its use in fraud, its use within, ill-gotten gains. Think of its ties to the likes of the Silk Road, for example, which is the dark web where people are able to buy drugs, or perhaps even the latest hack attack where we report that, of course, they want their money in none other than Bitcoin. So if you start to see the likes of IBM, Microsoft start to supply the government with blockchain data, with blockchain technology, we can start to make that distinction between the underlying technology, the ledger technology, and the cryptocurrencies that, we are potentially seeing in a bubble, volatility and linked to things that perhaps not everyone wants to see them linked to.
All right. Caroline Hyde for us there in London. Caroline, thanks so much. Bob O'Donnell, president of Technalysis, you're sticking with me. All right, coming up, Alibaba makes a push to catch Amazon in the race to become the world's most valuable company. Next, we dig in to what drives the companies on opposite sides of the world. And a feature I just want to bring to your attention, our interactive TV Go function. Find it at TV Go on the Bloomberg. You can watch us live. You can go back to our interviews. You can send producers a message, play along with the charts we bring you on air. This is for Bloomberg subscribers only. You can check it out at TV Go. This is Bloomberg. Alibaba is closing in on Amazon in the race to be the world's most valuable e-commerce company. Shares of Alibaba have almost doubled in price over the last year, while Amazon shares have only increased 25%. At $450 billion, the Chinese company's total worth is just $7 billion shy of its U.S. rivals. Joining me here in the studio, Bob O'Donnell, president of Technalysis Research, and from New York, Selena Wang, our Bloomberg Tech reporter who covers Alibaba. So what do you make, Selena, of this convergence in share price? We've actually got a chart to show it to you.
I think there's three main reasons driving this share price convergence. First of all, there's Alibaba's larger user base, higher margins, and larger potential for growth. This is really telling the bullish story of the Chinese consumers. I think investors are starting to realize that Alibaba plays a very integral role to the lives of middle-class Chinese consumers, whether that's through its digital entertainment platforms or through its shopping habits. And in addition to that, let's not forget, Alibaba makes a lot of money. Its net income far outstrips that of Amazon. Those higher margins are also driving this bullish sentiment from investors. And on top of that, investors see Alibaba as having a lot more white space than Amazon. Alibaba has been rapidly expanding in fast-growing Southeast Asia and other international regions, and not to mention rural China. This is a huge area of green space for Alibaba to push into and bring those rural Chinese online, driving Alibaba's bottom line.
Bob, is it fair to compare Amazon and Alibaba this way by looking at their market caps?
You know, I don't know. It's tough because, you know, as Selena points out, I mean, really what we're looking at, this is sort of like comparing the Chinese consumer economy versus the U.S. consumer economy, because each of these companies are highly associated with the regions within which they play. They're compared because there are obviously similarities. The large e-commerce companies, they've made investments in entertainment platforms and services. So there are some interesting similarities, but there's a lot of regional specificity that each one has, and there are unique characteristics, you know, on both sides. But the other big point that Selena made that is critical is Alibaba is actually making some money now. Amazon is investing a ton of money now, and that's a big difference. Not that Alibaba isn't, they are, but not to the same degree, and so the bottom line looks much smaller for Amazon.
Now, it's interesting, Selena, we traveled to Beijing just a couple of years ago to speak with Jack Ma, and there was some concern around that time that Alibaba might be a lot of hype. You know, what's changed when it comes to investor sentiment?
Definitely, investor sentiment has really come almost a full 360 degrees over the last few years. There were a lot of concerns about counterfeits, and late last year it was put back on the U.S. notorious list of counterfeit goods. On top of that, bearish sentiment really spiked several times over the past few years. There was the SEC investigation and outspoken words from very prominent short sellers like Jim Chano saying that the whole thing was a house of cards. Since then, Alibaba has consistently beat earnings and shown very impressive top line and bottom line growth. It's also come down very hard on cracking counterfeiters, taking down a lot of fake websites, as well as working with law enforcement to deal with that. That being said, there is some bearish overhang. The SEC investigation is still ongoing. A lot of investors and analysts admit that their financial disclosures are rather opaque, but the very impressive and compelling numbers are clearly asking them to overlook it.
Where do you see the most potential, Bob? I mean, they are so tied to their regional economies, and yet they are both global companies. They both aspire to be global companies.
Well, you know, if you look at Amazon, the thing that's one of the key differentiators is things like Amazon Web Services and what they're starting to do with Alexa and other services. Now, Alibaba is going to, I'm sure, be doing.
They have a huge cloud division.
That's true. They do. But the manner with which they sell them, the manner with which they approach it, again, it really does tie to the regional areas. And in the U.S., you've got a lot of companies that are moving their businesses to the cloud. It's happening in China as well, but I don't think it's happening quite as quickly. It's certainly happened faster here. So that's where I think Amazon has some advantage. On the other hand, there is that huge Chinese rural consumer that Selena mentioned that's an enormous growth opportunity that clearly Amazon doesn't have. And then there's the regional story. Alibaba having Southeast Asia, that's a huge growth opportunity. Europe's going to be a little bit harder to crack, I think, and other regions for Amazon.
So quickly, Selena, what does Alibaba need to do to justify the share price and a continued rise?
I think Jack Ma is really going to have to show that they can execute and integrate on these gigantic deals that they've made over the past few years, many of which have been this bet on offline retail. Now, Amazon has also pushed in this direction, but Alibaba has been doing aggressively for actually a longer time than Amazon has. So Jack Ma's vision is that they're going to revamp this trillions of dollars of offline retail and bring it into the 21st century. That means leveraging the data that Alibaba has to make the shopping experience easier. They have an incubation type of grocery store called Hema that's already executing on this seamless checkout, integrating with Alipay, allowing you to deliver in 30 minutes, using it as warehouses. So really, they need to show investors that these billions of dollars they're pouring into these other ventures are ultimately going to pay off and contribute to their bottom line and continue to drive that growth.
All right, Bloomberg Tech Selena Wang in New York. Thanks so much, Selena. Bob O'Donnell, Technalysis, you are sticking with me. All right, coming up, the turmoil at Uber continues. We will dig into the biggest headlines of the week from the beleaguered ride-hailing company, along with top tech stories. This is Bloomberg.
I'm Mark Crumpton in New York. You're watching Bloomberg Technology. Let's begin with first word news. Harvey is now a Category 3 hurricane with maximum sustained winds of at least 120 miles per hour. The storm is bearing down on Texas.
It's a hurricane that's going to prove more dangerous than many hurricanes. Not only are we going to be dealing with the high winds that typically come with what should be a Category 3 hurricane, but we are going to be dealing with immense, really record-setting flooding in multiple regions across the state of Texas.
Harvey is forecast to make landfall in Texas late tonight or early Saturday. According to people familiar with the matter, Special Counsel Robert Mueller is examining what role, if any, former National Security Advisor Michael Flynn may have played in a private effort to obtain Hillary Clinton's emails from Russian hackers. The U.S. has imposed new economic sanctions on Venezuela. President Trump's action bars dealings in new debt and equity issued by President Nicolas Maduro's government and by the state-owned oil company. The U.S. also is banning transactions in certain existing bonds owned by Venezuela's public sector. U.S. Ambassador to the UN Nikki Haley says UNIFIL, the UN's interim force in Lebanon, is, quote, not doing its job effectively.
We talk a lot around here about prevention of conflict. It's true there's been no conflict in South Lebanon since 2006, but that's not the same as peace and security. Since 2006, there has been a massive flow of illegal weapons to Hezbollah, mostly smuggled in by Iran.
UNIFIL's current mandate expires at the end of the month. There are reports of at least 14 civilian deaths after Saudi-led coalition fighter jets bombed the Yemeni capital of Sana'a Friday. The bombing was the latest in an escalation in the coalition's air campaign in Yemen. On Wednesday, at least 41 people were killed when aircraft bombed a small hotel near the capital.
Attacks targeting civilians or civilian objects are prohibited under international humanitarian law, which also prohibits indiscriminate or disproportionate attacks. We remind all parties to the conflict, including the coalition, of their duty to ensure full respect for international humanitarian law.
Yemen's foreign minister tweeted that Friday's airstrike should be investigated by the coalition. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton in New York. This is Bloomberg.
This is Bloomberg Technology. I'm Emily Chang. Uber is reported to be slowing down its office expansion plans. The company said to be considering a sale of the Oakland, California office building it purchased 2 years ago for a reported $123 million. Earlier this week, we learned about the ride-hailing giant's financials, including the fact that despite an increase in net revenue, the company remains unprofitable. We also learned new details from the legal dispute among board members over who should be its new CEO. Joining us now to go over the biggest stories in tech this week, our guest host, Bob O'Donnell of Technalysis Research, and Bloomberg Tech's executive editor, Tom Giles. So, what is the latest that we know, Tom, when it comes to the search for the CEO and the boardroom drama?
Wow. Well, it just every other day there's another bombshell. There's another filing that shows there's great animosity between Travis Kalanick and Benchmark, one of its biggest investors. It's about how much control Kalanick wants to have over the company, his control of board seats, his involvement in day-to-day operations. Clearly what happened over time was Benchmark, according to the filings, became more and more dismayed with the way he was running things, the concerns about possible legal liabilities when it came to the auto acquisition, how he's running the company, the allegations of sexual harassment throughout the company and whether he had control of it. So, and with these filings, you see the personal acrimony between these two parties just has gotten incredibly out of hand, incredibly toxic.
What is so fascinating about it is that Bill Gurley, of Benchmark, who was on the board, was so publicly supportive of Travis for so long, and yet now we're seeing all of this unfold. What do you make of the fact that it's gotten so contentious?
Well, it's almost like a family drama, right? I mean, it's like the son that went bad and the father, sort of disowned him. But it's just kind of staggering. But the bottom line is, look, it was a company valued at $75 billion. So guess what? There's a lot of people interested in making sure that they don't lose their piece of it. And unfortunately, what's been happening is we're seeing mutual funds, other companies who have some piece, writing down the valuation of their piece of Uber. So that's starting to freak people out because they're going, wait a minute, we don't want to, we're talking billions of dollars being lost because of these actions. So they want to get this figured out, and yet there is so much distrust and so many challenges that it's hard to deal with.
And we got news of these write-downs. At the same time, we got some new numbers from the company. They are growing.
Right.
When it comes to net revenue, but they still lose a lot of money.
Yeah, which companies do.
Right.
But pre-IPO,
companies
continue to lose money. Amazon loses money every once in a while, and we don't give them too much of a hard time over it. The sense we are getting is that they're not being hurt too badly on the revenue side, on the growth side, from the all of the internal, the boardroom drama, et cetera, all the allegations of our treatment. Now, is it affecting recruitment? We are hearing about that. But no, in terms of the numbers that we're seeing publicly, not a huge impact yet.
We'll see how the numbers look for the current quarter, which would be the first quarter that Travis is not there, at least for the full duration of it. I want to talk to you, Bob, about the Samsung Note 8 unveiled this week after, a great drama last year, exploding phones, exploding batteries. What do you think of the phone?
It's a great phone. I was there at the event in New York, and Samsung started out with a really sincerely done mea culpa and really addressing the concerns, and then appreciating and showing the loyalty of their big fans. Who the Note 8 people are huge. The Note people in general, huge Samsung fans. It's a great looking phone. It's got a lot of capabilities. I love that Infinity Edge display. It's the kind of thing that's compelling enough.
Rounded around the edges.
Rounded around the edges. And when you look at that compared to a current iPhone, you're like, oh man, it's so much better. Now, obviously, Apple will address that with the next phone.
But
it's a great phone.
Yeah, we just have a couple of weeks. So they really need to get that out. They need to get the message out there. The phones, I've held the phone. It does feel good. It's hefty. The stylus is a nice touch. It's got some cool features to it. Can they get the message out there? Can they get the reviews out there? Can they lift the embargo and get them in stores in time to beat the hype over this next version of the iPhone, which, as we've reported, is going to have a lot going for it.
Right.
Not to mention the Amazon Whole Foods deal closing and Amazon announcing that on Monday, we're going to start to see price cuts at Whole Foods. I can't think of anything that's excited me more lately. But cheaper chicken and salmon at Whole Foods.
And avocado,
Yes.
organic.
Oh my goodness,
go.
avocados have been so expensive lately.
Well, but actually, the most impressive thing is the fact, A, that the deal is closing this quickly. This is a huge deal to close this quickly, and the fact that we're seeing actual events occurring this quickly, right? A lot of times when these big, purchases occur, there's big talk about
Takes forever,
what we're going to do
right?
eventually, but to see this actually happen is interesting. Now, obviously, the much bigger question is going to be, okay, that's fine. It's easy to cut prices. It's a way to get attention, blah, blah, blah. How do they actually start to integrate it? And there's still a lot of questions that remain because no one, despite the logistics capability of Amazon, no one has nailed grocery online logistics. And that's the big question.
I'm kind of wondering if there's going to be a run on Whole Foods on Monday morning.
We're going to be there, and we'll give you color from
All
it.
right.
We were there
Can
today
you pick
looking
up
at
some avocados for me.
We were there looking at prices. We were there looking at how are they getting ready for it? How are people getting? We saw shipments of Echoes, for example, outside one store here in California. So you're going to see some electronics in there too. Actually, we were the first to report that a couple of days yesterday.
Interesting.
Yeah.
Well, we'll have to see what happens on Monday. Very excited for that reporting and for my next trip to Whole Foods. Tom Giles, our executive editor for tech. Thank you. Bob O'Donnell of Technalysis. You're sticking with me. All right, coming up, why the next battleground for the Billionaires Club is out of this world. We take a look at the multi-billion-dollar investments pouring in for the final frontier from private space investors next. This is Bloomberg. Microsoft says the new gaming console One X is the fastest selling Xbox pre-order ever. But the company has yet to release specific sales numbers. The video game system costs $499, and Microsoft is billing it as the world's most powerful console. The Xbox One X will launch in stores November 7th. In the space race, it is no longer between the U.S. and the USSR. Now, a commercial contest is pitting billionaires against everyone else. They are investing in everything from commercial space travel to asteroid mining to interstellar package delivery. There are over 225 private space ventures, and that group invested about $3.1 billion last year. That's according to Space Angels, a network for space investors. Joining me now, Space Angels CEO Chad Anderson. So, Chad, we hear a lot about the billionaires and their efforts. How will smaller companies take on the big guys?
That's a great question. I think we've seen some of these companies be successful already. Some of these new entrepreneurial space companies. SpaceX is a great example. So they have, in 2012, there wasn't much, the U.S. share of global commercial space launch was basically non-existent. And today, SpaceX is 65–70% of that market. So, and they've come in and they've done that by really focusing on basic business principles and transparent pricing, which I think doesn't get a lot of credit. So by
Let me rephrase, Chad. How do smaller companies take on the Elon Musks and Jeff Bezos and Richard Bransons of the world?
That's a great follow-up because now the SpaceXs and the Bezoses, Blue Origin, they are the big boys. And so I don't think that the companies, you're hearing a lot about these new small launch vehicles and how they're taking up these new constellations of small satellites. I don't think that they're competing with SpaceX and Blue Origin head-on. What they're doing is picking up the gap in the market that they're not addressing. So SpaceX started with a Falcon 1, which is a much smaller rocket, and they've abandoned that concept and moved on to the Falcon 9, the Falcon Heavy, and the larger vehicles that are going to help take us to Mars. And Bezos's New Glenn is of a similar breed. So the types of companies like Vector Space Systems, which we've invested in, is a small satellite launch vehicle, and they're taking up these smaller satellites that SpaceX and this New Glenn rocket are not really addressing.
So what makes the small satellite market such an attractive investment?
It is a market that exists today, and it's large. And you've got a lot of incumbents, legacy aerospace companies that have been really focused on the defense market for decades. And they've gotten very large, and they've done things a certain way. And we've seen new entrepreneurial ventures come in and really start to shake things up. What normally has taken very large bus-sized satellites that cost $1 billion plus or minus to build and launch, 15 years to put together. Now we're seeing these entrepreneurial companies come in and build these satellites for a few $100,000, launch them for a few $100,000. And in doing so, they're able to cover more of the Earth and get more data from these sensors. And so we're seeing a real proliferation of data from small satellite constellations versus the single large satellite.
How would you characterize the level of regulation in space? I mean, would you say it's still like the Wild West?
There is a lot of opportunity. But I wouldn't go as far to say as it's like the Wild West. It's got a lot of regulation. There's a lot of regulation involved because space is used by all countries, and there's lots of people with very expensive satellites and operations happening in space. And so it's very important that we keep the environment running smoothly. And so there is a lot of talk at the moment because we've been talking about the existing markets that are being disrupted, but there's a lot of new markets that are being created. Asteroid mining is one, lunar transportation and logistics is another. How does this fit within the regulation that is decades old, right, in the Outer Space Treaty, which was written during the Cold War and was really meant to keep the government from owning the moon?
You know, some have likened this to the early days of oil drilling or coal mining, and that, you know, we may be polluting the environment or disrupting the environment in space in a way that we'll learn decades from now, you know, was not particularly good or safe. Do you worry about that risk?
I think that it's something we need to be conscious of, but the types of companies that we're seeing that are operating in space now. So a lot of attention goes to these new small satellite constellations and saying we're putting a whole lot of small satellites into orbit, and what happens to them when they're done. And we've got regulation in place that these satellites need to come down within 25 years of their life. Most of these satellites come down much earlier, just through physics. If they launch in low Earth orbit, say from the International Space Station, they're in an orbit where there is still some atmosphere and there's some drag, and so they come down in 6 to 9 months without any propulsion. And in addition to that, we're seeing the small satellite industry come together and self-regulate. So they're conscious of this, and they want to keep their highway in space open for, to keep their operations running smoothly as well.
All right, Chad Anderson, CEO of Space Angels, thank you so much for joining us. Coming up, it is Mayweather versus McGregor in one of the biggest money fights in years. We will look at who will win out and whether UFC's business could be sucker punched, depending on who prevails. This is Bloomberg. Roy Price, head of Amazon's TV and film studio, has been investigated by the company for allegedly making lewd remarks to a producer in 2015. That's according to The Information. The alleged victim, Issa Hackett, a producer on the Amazon original series The Man in the High Castle. Hackett said in a statement that she did not want to discuss the details of the matter, but that Amazon investigated immediately and used an outside investigator. Mr. Price, through his attorney, didn't comment publicly. An Amazon spokesperson said in a statement, "We take seriously any questions about the conduct of our employees." Well, after months of hype, Saturday is the big night. Undefeated boxer Floyd Mayweather faces off against UFC legend Conor McGregor. The fight is definitely a rainmaker for Mayweather and McGregor, who could each see payments of 9 figures. And while it's McGregor's first pro boxing match, UFC President Dana White told Bloomberg he's backing the underdog.
It's obviously the boxing people who are saying he has no shot, he will be annihilated. Let me tell you what, when two people square off, that know how to fight, start throwing punches, anything is possible. Conor McGregor has knockout power in both hands. He can win this fight.
Earlier, Bloomberg Markets spoke with Paul Sweeney, Director of North American Research for Bloomberg Intelligence, and Ross Greenberg, former president of HBO Sports. Ross has worked on dozens of mega boxing fights, and Bloomberg started by asking if this was the biggest fight he has ever seen in his career.
Well, I think Mayweather-Pacquiao a couple of years ago at that point became the biggest, and now we'll see. I mean, if tomorrow night this does 5 million buys and eclipses that fight, yes, it will be.
Worth $100 on pay-per-view, Paul Sweeney. That's a lot more than we've ever seen.
It's a lot more, and as Ross was saying, this is, he's done a lot of the big fights, but this one could be the biggest one. It's a big price point at $100, but I tell you, the cable operators are all, salivating to think about some of the pay-per-view buys. And, this is expected to be, a huge winner for the cable companies, obviously for the boxers, the promoters, for everybody in Vegas, going to be going to the fight. So a lot of winners coming out of this fight.
Ross, if McGregor wins, maybe he then leaves the UFC and goes to boxing. I mean, what's the best result from the UFC's perspective?
That's a great question. I think if you ask Dana White, if Conor McGregor ends up making over $100 million, he's got a small problem because he's never made more than 14. And the entire business model of the UFC is to keep the payments to the fighters low and make more of the money for the UFC as an organization. So he's going to get in a difficult bind with Conor McGregor. There's no question about it after this fight.
Do you think Conor McGregor, Ross, if he was to win, would turn his back on the UFC, even though he's said he'll do both? Would he turn his back on the UFC or not?
I don't think so, because I think at the end of the day, you need a Floyd Mayweather in order to make this kind of money. And there aren't any other Floyd Mayweathers in boxing today, and Floyd will retire. So pending some kind of a rematch to create this kind of money again, Conor will probably end up making that 14 or 15 million in UFC fights or in subsequent boxing events later on. So I can see him doing both, but I think this is a long shot. I'm going to be honest with you. He's an amateur boxer going up against one of the greatest boxers in the history of the sport. So it would be, Jets beating the Colts type of upset if it happens.
Ross Greenberg there, formerly of HBO Sports, Bloomberg's Paul Sweeney as well. Still with me, our guest host, Tech Analysis Research President Bob O'Donnell. All I can think about is that the last time this happened 2 years ago, everyone was watching on Periscope, and that became the big controversy, for at least in Silicon Valley, for the next 24 hours. And back then, we didn't even have Facebook Live.
I know.
I mean, pay TV operators, Showtime, they're going to make hundreds of millions of dollars off of this, but can they prevent people from streaming this on Facebook?
It's a great question, and I don't know if they can. I mean, clearly you're going to have people watching and looking for that and trying to actively stop these streams, but it's a real-time event. When real-time events, the whole world is now broadcast live. So how they're going to stop that is beyond me. And it does raise that question. I mean, pay-per-view, particularly on fights, but pay-per-view in general, you have to wonder for live events, how long does that business model work, really? Long-term, when everybody in the world literally is carrying a camera and they're at events and they're shooting video of it, there's going to be a lot of people who say, yeah, the quality isn't great, but you know what? It's cheaper than $100.
Right. So then, what's an alternative model?
Well, you're going to see. Obviously, it gets sent to sports bars and other places where people gather. I mean, there are plenty of other places to do it, but the money numbers come down a great deal. So I just think this is going to be an archaic kind of a notion in the not too distant future.
Who are you rooting for?
Well, it'd be great to see McGregor, but I do think it's a long shot. I mean, it's just, he's a different kind. That UFC fighting is completely different. And, I mean, who knows, maybe he pulls out some tricks that we don't know about, but it seems like this could be another very quick fight like the last one. Of course, that would frustrate a lot of people as well if they paid $100 for it.
Well, not if they were watching on Periscope, though. I believe Dick Costolo, who was CEO of Twitter at the time, declared Periscope the winner of the fight. In the aftermath, he got a little bit of flack for that. But we'll be watching, squaring off in Las Vegas on Saturday night. Bob O'Donnell of Technalysis, thanks so much for being my Friday buddy today. I appreciate it. And thank you all for watching. That does it for this edition of Bloomberg Technology. This Monday, we will talk with Olaf Carlson-Wee of Polychain Capital, who has devoted his entire career in cryptocurrencies and is one of the most prominent investors in blockchain. He will give us the lowdown on Monday. And a reminder, we are live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That's all for now. This is Bloomberg.